say something at a certain time.
This is our official start. We're starting it actually much more fun, which is mid-conversation, like the cool podcasts.
Yeah.
You know.
I mean, we're catching up.
Yeah.
I mean, it's been 16 years.
See, this is the thing. Before we started this show, loaded and rolling, by the way, thanks for joining us. Talking with Andrew Haun. I went to high school with him. So this is a catching up not only of insurance stuff, but everything else as well.
Life. Insurance and life.
Insurance and life.
Not life insurance. No. Just insurance and life.
But like, how did you get into it? Because that's what I was talking about. You did a stint in the Marines and stuff.
Mm-hmm.
You did some other insurance. What got you into this trucking insurance?
Honestly, I was trying to prospect Reliance Partners 401k plan, and I somehow landed a job interview, and I think they just valued my pitch and brought me in, and I appreciated Reliance Partners culture.
Yeah.
I think it wasn't necessarily trucking insurance that brought me here. It was Reliance Partners that brought me to trucking insurance.
But you're trying to sell them the 401k.
Yeah, not very successfully because I didn't get the business. But I ended up with the interview, and I guess I interviewed well.
Were you downtown where the old Arrive office was in Chattanooga?
No, so when I first started, we were at the Liberty Towers.
Okay. That's where Flying is now. Are y'all still there?
No. We're right here next to,
Man.
I mean, like, I park. I turn around in y'all's parking lot a lot trying to get into the garage with my truck.
That's the best part. For listeners who don't understand, FreightWaves has a parking lot right behind this whole studio thing, and so it's a great prime spot downtown.
Yeah.
They don't really tow yet as of late.
Yeah, this is my first time in studio. I did some remote stuff with Dooner, and then so when I walked over, I actually walked right past the parking lot and went to the members entrance downstairs. And I was like, okay, I'm knocking on the door. Like, is anybody gonna answer the door for me? And I was like, you know what? Maybe I should go to the parking lot that I turn around in all the time.
That happens all the time. Whoever the production assistant, we have a really tight crew here. Whoever the PA is, we're going to give them a stern talking to. We're supposed to wrangle our guests in beforehand. There's the bottom old World of Beer area because we bought it out.
Yeah.
Well, you're in the right spot now. So speaking of spots and stuff,
okay.
My biggest question, I was super excited to reach out because we work with y'all on tons of stuff,
Yeah.
Was that like trucking and insurance? Once a year, you got to like renew it and stuff.
Right.
But trying to understand the whole thing, like from your experience, like how do you approach it? Do I just sign up for like a plan and then you come back every year and it's like, hey, time to look at? How's this early stage work in the insurance game?
Well, it kind of depends on what fleet bracket you're in, I guess, right? So as you're well aware, most of the trucking companies in America are in that 1 to 3 space. And in that 1 to 3 space, I think we see a lot of new entrants to the marketplace right around that February, March, April, May timeframe when tax day comes, because then they have some tax money to start up a new business. They get their DOT and their authority, they apply for their authority, and the insurance is what makes that authority active, right, for over-the-road truckers. And so you see a lot of entrants, or a lot of effective dates, if you will, in that FMAM, but also at the end of the year when business is really good.
Yeah.
Right? So they want to get in to pick up those rates for themselves instead of maybe being an owner-operator or being an employee driver at, Covenant.
That's what I was curious about, because we look at data, revocations data, and I wanted to know if there was ever a spike, because you can pay the amount to keep your authority, but normally you stop paying your insurance when you for real are done driving.
Right. Well, so your authority will actually be revoked after about a business week of an insurance filing lapse.
Huh.
Right. So let's say your effective date is today.
Yeah.
Right. Your insurance actually expired at 12:01 a.m. You haven't had insurance today. Does that mean that your authority is revoked? No. That just means that you're not insured. Right. So you can't, if you got into an accident and you hit somebody, there's no indemnification, or that individual will have to go after you personally as opposed to getting an insurance payout. However, right, it takes about a business week, I think, for the FMCSA to catch that and to revoke your authority.
Then you're inactive in the system, and so that's when it's totally legit done.
That's when it's totally legit done. Or if you don't do your biannual DOT update on your MCS 150 and your DOT is inactive.
That's what I was curious about, because the MCS 150, I didn't know if it was every year I need to upgrade it, every 2 years.
Every 2 years. And the last two digits of your DOT number kind of tell you whether it's an even year or an odd year, and then what month in that year that you need to be doing that update. Technically, it is on that date and that month, technically is what it is, or any substantial operation change, right?
Yeah.
Could that be 1 unit in growth or 1 unit decrease? That could, because there's no real definition of what that is. And I would refer to John Seidel or Mark Baller or somebody on our team to get that transparency prior to.
Because people get on me online and they're like, so I'll look at net revocations because we don't know how many trucks are leaving a marketplace. So I'm thinking, well, insurance data is one thing, net revocations, operating authority. But then they're like, well, that's not always right because the MCS 150s are so delayed. And so this was always my biggest question, because if I'm about to go out of business, or if I'm looking to either start it, is there any specific times? Because you had a great point that you mentioned the early part of the year, and then if I got a big old bonus with the holidays are my two big times.
Yeah.
Is that like for starting? Is there one for like ending? Is there one where you just see like everyone's tapping out?
I think that has more to do with the marketplace, right? When we're seeing, average drive-in spot rates at $150, you're going to see revocations because, drivers are wanting 80 cents a mile. If drivers are 80 cents a mile, your insurance is, let's call it $1 a mile. You're a 30-cent net loss, right? And that's just between drivers and insurance, not to mention the lease payments or paying for the loans on the trucks or your factoring fees. You know what I mean? There's so much more that goes into that. And if your drivers and insurance are putting you over, you're not going to be able to survive long.
Is it, from your experience selling insurance and stuff, if you guys are able to, does it happen where they just stop paying, or do they give you a heads up and they're like, man, I'm going out of business?
I've had both. Yeah. I've had both where, they call me. Because, I like to be relationship driven.
Yeah.
And so I would think that most of my clients that are going out of business call me and say, hey, Haun, I'm not making it, man. We're going to have to shut it down. Can you send me cancellation form so I can cancel my insurance? You've got those that just don't pay and then disappear, but I think that's probably more rare than anything.
Yeah, because there's a lot more else going on. You probably don't want to insure those folks in the first place.
Right. And it's pretty obvious too when you're gathering information for these people to shop the insurance market. It's very telling on how a trucking company provides you the information that you're requesting. Equipment list, driver list, 4 quarters of IFTAs, loss run information or certificate, financials for larger fleets. If they're very reluctant to give that to you, it's pretty telling that either they don't want to work with you or they don't have it all together to provide it for you. And that's, as an insurance company, right? So the insurance agent kind of sometimes acts as a buffer in that nature, where the insurance company doesn't see that part of the transaction, which is generally probably beneficial to the insured, of the client, the customer, the trucking company, because the insurance company doesn't necessarily see how the operation is ran on the books unless they do a loss control, right?
Yeah.
So it's very telling when you're not getting that information or getting that information piecemeal. It's pretty easy to spot those types of operations.
So if I screw up, what is this loss control? Is that when the insurance?
No. Okay, so what is insurance, right? You're transferring risk.
Yeah.
Everybody watching FreightWaves that's ever seen me speak is probably tired of hearing me say that. It's a transference of risk. You are paying an insurance company to accept your risk, right? If you pay more insurance premium, it's because the insurance company views you as more risky.
Yeah.
Right? And so, especially with larger fleets, and I won't even say larger fleets, even medium-sized fleets, 10 to 250, right? Insurance companies will do, it's called a loss control. They'll either visit you on site to your terminal or headquarters, or they'll do a virtual loss control. And they're asking questions like, if you have a driver that gets into an accident, what are your accident reporting procedures? If you have a driver that gets an out-of-service inspection, how soon do you get notified of that from your driver? What telematics do you have in your equipment to identify crashes as soon as they occur? Right? They're asking all those questions. do you run PSP reports, or are you doing pre-hire drug screens? Which the answer to all these questions should be yes.
Yeah. With
Right?
the alcohol in the clearinghouse.
It's regulated.
Yeah.
You know what I mean? And I think what a lot of trucking companies may be reluctant to do that loss control is it's a great opportunity to prepare yourself for a DOT audit.
And they don't want that. I guess there's a concern too. There's a fear that if I get fully audited, they'll find the proverbial skeletons in the closet.
Right. And everybody has them, right? No one's perfect. There's not one trucking company in the nation, I don't care what anybody says, that's doing everything perfect. Doesn't exist.
It's all hit. My wife did logs, and that was the one thing that blew my mind is logs and safety and compliance for insurance and everything else. It's like even when she was at a U.S. Express and now at her startup, there's always something that screws up.
Yeah.
Doesn't matter. Even the drivers, they'll not know how to do their statuses. But I'd heard with the telematics, because this is cool. Dash cams, telematics. Some folks I've spoken to said that for now it's helping fleets and insurance companies. It's more of a good thing, when in the past there's always been some commentators that would say things like, well, I don't want people to see my dash cams. I don't want this front facing. Are you seeing a lot of that now where fleets are trying to leverage this data?
I think that some fleets are trying to leverage that. And to be clear, right, retail agents, that's what Reliance Partners is. We're a retail agent. We're kind of there to help present the trucking company to the insurance company and the insurance company to the trucking company, right? And so we have to be aware that what the insurance company is using that information for. And I think what we're seeing a lot in the marketplace, people and insurance companies specifically are kind of moving away from that inward-facing dash camera, because you could have rear-ended someone, right? Yeah. And you're going 5 miles an hour, and it doesn't look bad. There's barely any damage to the personal vehicle. However, if that inward-facing dash camera is showing your driver's been over picking up a cell phone, then you just went from having a small fender bender to negligence.
Oh.
Which is, litigators, dinner bell.
During discovery. Next thing you know, hey, give me all your data.
And so I've seen insurance just in the last couple of years, right? Insurance companies are kind of moving away from requiring inward-facing dash cameras, but wanting that outward-facing dash camera and the telematics that go with it, right? How many miles? Where are they going? When are they driving, right? Are they driving during rush hour in Atlanta? Well, that's more risk. So to your point, yes, they are leveraging it. The smaller trucking companies are essentially need the agent to represent that. The larger trucking companies that have more of a relationship with the insurance company, because they may be self-insuring a little bit, they may have a higher retention, higher deductible on their liability, they may have more opportunity in the loss control, for instance, to have that type of conversation with the insurance company and not just through the retail agent or the broker.
Yeah. Self-insuring question, because I was curious about this. U.S. Express, when I worked there, they said it was partially self-insured. Mm-hmm. Is that something where I say I will pay up to this much of a boo-boo, then I have to use this special policy for like super catastrophic? Or is this, I always wondered that, because I was like, well, if you're large enough, I'm assuming you still want a form of insurance.
Sometimes, yeah. It comes in a couple different, flavors, if you will. You've got deductibles, you've got self-insured retention, you've got captive space where you're insuring the first $1 million of any loss with maybe an aggregate or maximum out of pocket, to put it in familiar terms, of $2 million. That all depends, normally based off of underwriting, actuarial data. And in the captive marketplace, it's, through the feasibility study, right? So there's actuaries that will determine, based off of your balance sheet, your assets, what type of retention you should really be taking. There's also you can look through the past 5 years of losses, what's the average claim count and the average loss, and then how much will a deductible offset total losses, right? How much risk does the trucking company want to take? It's all transference of risk. I think trucking companies that want to move towards retention or deductibles are on the right path because they're betting on themselves.
Yeah.
Right? They're betting that their safety department, their drivers, their SOPs, driver handbook is better than what the insurance company's giving them credit for.
And you want to show that data off.
Yeah.
That's what I was thinking, because with the rise of nuclear verdicts, it feels like to me I would hate to be the actuarial person. I think it was a Schneider or someone else had like $45 million. And like Werner had like a 50 million or so, some of these big ones. That's what I was curious about. Do you just call up your insurance, be like, well, here's my max out of pocket of like 5 or 10.
It's normally collateralized.
Okay.
Right. So you're also still paying premium in a sense, right? However, that part of that premium, let's say 50 cents for every dollar, goes into a loss fund for captive markets, for instance, right? So the money for that claim is going to be coming out of the premium you've already paid, and if they need more, depending on how it's structured, they're going to be calling on that collateralization.
That's smart. So in a captive sense, I'm already it's like what they do with drivers. You put money in a fund for a maintenance or something.
Sure, yep.
Some insurance policies are like that. Just put a bunch of this money.
Like an HSA.
Yeah. The health insurance and truck insurance is starting to become a lot more interesting. I do wonder if we're going to see, this is a little forward-looking question, with all this telematics, I spoke with a few folks who talked about AI algorithms. And they said nowadays the trucks can tell you before they fail when they're about to fail. Is that going to be one day, I think it was...
it's wild.
Yeah, because they put them in the machine learning. They're like, well, if this part fails, there's a statistical likelihood it causes this and this part to fail. So we know within this mileage band. Is that going to be something as an insurer? I'm assuming, do you want that info or do you kind of not want that info? If you have like the Minority Report version of your truck predicting.
No, man. I think I would. I'm glad I'm not an underwriter.
Let me really bald. You think I'm bald?
Yeah, I can only imagine my boss coming down and saying, hey, why did you write this policy at $5,000 a truck and we've had 150% loss ratio? That's not a conversation I want to have.
And like representing the fleets, this is what's so cool. I'm assuming for insurers, like a Reliance steps in because you can find the fleets, because it's hard enough to find fleets. They come through you to get help. But at the same time, you also are giving your street cred to the insurer to know that I'm going to give you good people if you work with us. Is that how the kind of the thing works with trucking insurance? Because I'm assuming, like, if you're a small fleet, I've spoken to a lot of insurance, but it does seem like you always have a middle agent to assist because it's just so complicated.
Yeah, I mean, I guess we are that middle agent, right? I mean, in prospecting, obviously everybody builds their book differently.
Yeah.
It's a sales organization. Let's not lie here. Trucking companies are in it to make money. Insurance agencies are in it to make money. Insurance companies are in it to make money. Everybody's in it to make money.
Yeah.
We're all here to make money. And I think as you build your book individually as an agent, you find what you're good at. My partner and I think we find that relationship is our key. And so, you may not see the traditional prospecting out of us that you might see out of a newer agent that's making 100 cold calls a day, right?
Yeah.
Just like a broker would. I think what benefits both the trucking market and the insurance market is that the federal filings are public.
Yeah.
Right? MCS 150 data is public, right? It gives everybody an opportunity to win. Reliance Partners wins when we've earned your business. We've earned your business because we called you or contacted you based off of your effective date, your MCS 150. The trucking company wins because Reliance Partners has access to all of the markets in the state, right?
Yep.
So it's kind of a one-stop shop. I think maybe that gets lost in translation sometimes because it's very transactional a lot, especially in the smaller fleet market.
Yeah.
It's, hey, I need to shop my insurance. I need to shop my insurance. That's what I love about Reliance Partners. We have all the markets, and so we're shopping your insurance anyways.
Yeah, having that access. Because I heard depending upon the market, you can have wildly different rates. And that was a big reason the telematics is big, because if you don't drive in California, your profile is completely different than a Southeast.
Sure. Yeah, I mean, every insurance company has an actuarial model, right? Or a rater or whatever you want to call it. The insurance company values something that they deem identifies risk, right? That may be drivers under 2 years of CDL experience. That may be driving in Georgia and Florida and New York, right? Every insurance, or driving over 600 miles total radius. Every insurance company views that risk differently. And so when an insurance company is getting shot, or a trucking company is getting shopped through the insurance market, the insurance companies that value things that you're not good at as a trucking company are going to decline you or give you a higher rate.
And you want to know, that's what I was curious about, because it feels like to me the market is insurance is a very complicated market because it has to be complicated when you talk about how much am I going to have to pay out if you screw this up. Risk markets, like any capital markets. So that's one of the biggest values is with the personal touch. You see the MCS 150. If I went from like 5 to 50 trucks, having the personal touch means like, hey, Thomas, I'm giving you a call. I see you just filed this. We need to I can save some stuff for you. I can be the person, because it reminds me of healthcare as well, or Salesforce. There's so much complexity. You have to have like a group of people who have one foot in this door and one foot in this door to kind of go. That's the value.
Right. I mean, to use your example, 5 trucks to 50 trucks, there's a lot of risk there. Right? What practices have you put in place through your SOPs or driver handbook, hiring guidelines that allow you to grow that fast within a short period of time? Right? That's like if you opened up an ice cream store. Okay, I've got one ice cream store today, and I've got 50 ice cream stores in 6 months, or, compared to, let's say, 20.
Yeah.
How did you do that without cutting corners? That's what an insurance company is normally thinking. How did you hire 45 drivers and bring in 45 pieces of equipment, 45 assets? How did you do that in such a short amount of time without cutting corners?
You love my old startup, AI Fleet. That's where I came from.
Yeah.
And they went from, I remember we started 1 to 5. They used Progressive. And then Progressive got to a point where they're like, get the hell out. You're too big.
Yeah.
And we're like, what do you mean we're too big? Because you don't know how insurance works. We're like, you just kicked us off the insurance. We got like 10, 15 trucks now. So having to work through it. I think they went through Reliance. I don't know if they are in the current one or they might have. I remember.
It sounds familiar.
It does. Out of Austin. But that was one of the things I was curious about, was because they want to get to like 300 trucks. But at the same time, they've only been around since like 2021.
Well, the good news is there's always going to be an insurance market.
Yeah.
Right? It just may not be the quote you're looking for.
And then you want to work with your rep, because if you get a timeline and you're like, well, I want to level off at like 500 for the next 2 years, then you can, I guess, as the longer you're there at the size and don't screw it up, then you can hash out.
Yeah, and that depends with every market, right?
Yeah.
I mean, those finite details are obviously negotiated between your agent and the underwriter, the insurance company, things like that.
Tidying things up here, because I know we went over the telematics stuff, getting discounts, all the fun things. You came from a different side of insurance before trucking, 401k. What was the biggest surprise switching over into doing this kind of?
Well, I mean, I not just 401ks, right? It was the securities industry is so regulated, and trucking is also very regulated, but kind of in a different way, right? I think the biggest surprise to me is how trucking still kind of feels like the Wild West a little bit. You know what I mean? Which I appreciate so much, because it makes every day different, right?
Yeah.
I like that is still kind of the case. Obviously, regulation has to exist for the protection of society. But I love that trucking kind of has this Wild West feel to it. Absolutely love it.
We should have done a Rogan start midway through, because that quote you're talking about, when I was in the Marine, I wore a uniform, and then I wanted to switch to the suit as my uniform, and now I wanted to find something where I didn't have to deal with the suit.
I'm wearing jeans and cowboy boots, and I love it.
Like, this is the industry, and I think that's so great, especially with your story, as you're looking ahead, like, top of mind, anything on the horizon. There's tons of buzzwords, AI and everything else. What are you thinking about from an insurance standpoint? What should folks be aware of that you all are keeping an eye on?
I think regulation, right? I think we just saw New Jersey pass some regulation that was kind of eye-opening.
Yeah.
Increasing their Class 8 commercial vehicle insurance requirement to 1.5 million.
Whew.
Which is twice as much as the federal standard. I mean, everybody gets $1 million policy pretty much because they need it for broker requirements, shippers requirements. The federal minimum is 750.
Yeah.
Right. So the fact that New Jersey said we're going to 2x that is interesting. And I think we're going to see other states follow suit. Right. Now, I think New Jersey's still working through some of those items. Are we grandfathering in? Are we not? I think that is going to be the biggest impact on trucking companies, because you can't just increase the risk share with the insurance company and not expect more premium to be paid. And if rates are not going up proportionately, then we might have a problem.
Just mandating a market. That's what you don't see, like Florida with housing insurance, or a California. That's the big fear, is if they just decide, like, Illinois is fed up with the accidents, 5 million. an EMC. That's the fear, right?
that is, yeah.
Keep you up at night.
I don't even want to think about $5 million.
Cold sweat.
Yeah, I would. There's too many good trucking companies and good people out there that are just trying to move freight for us. I would hate to see that happen to them.
Knock on wood.
Yeah.
Running out of time here. Folks want to learn more. We're going to end on a higher note. Yeah, I know. No more doom and gloom here. Folks want to learn about Reliance. Get in touch. Best way to find out.
Man, ReliancePartners.com. Super easy. I mean, you can click a quote. If you're already a client, you can file a claim. You can call the 1-800 number. We'll get somebody on the phone with you. It's LinkedIn.
Yeah.
I mean, we're everywhere. You know, we got offices all over the country. We're here for you.
Give it a look. Thank you so much. Really appreciate you coming on. If you want to find out more, if you're just joining us, it's going to be on demand. Apple, YouTube, Spotify. Also, we have a newsletter Thursdays at 2 p.m. Join us next week. We'll do it live.